Hello, I'm Maria. I'm planning to invest in the bonus market, but I need your help to know how does it work and what is it. It's known as a fixed income instrument which represents a loan made by an investor to a borrower. There are 21 kinds of bonds, which includes the most important, treasury bonds, investment-grade corporate bonds, foreign bonds, and municipal bonds.
Hi, my name is Camila and I'm going to present you both themes. The first one is the use of the market bonds and the second one are the characteristics of the market bonds. Individuals and institutions can use bonds in many ways, from the most basic, such as preserving principal or saving and maximizing income. In fact, bonds are much more complex and versatile than they appear to be, and provide a variety of options for the investor in any investment environment. Bonds have some characteristics. The first one is that a bond is generally a form of debt which the investor pays to the issuers for a defined time frame. The second one is that they have a fixed maturity date. And the last one is that all bonds repay the principal amount after the maturity date. However, some bonds do pay the interest along with the principal to the bondholder.
Although bonds have several advantages, these are two of the main ones. The biggest advantage of investing in bonds is that there are very less chances that you will lose out on your investment, and when compared to other safer forms of investments, such as saving accounts in banks, bonds pay a much higher rate of interest. As anything is perfect, bonds also have some disadvantages. The foremost disadvantage of bonds is that when compared to shares, gold, and real estate, the rate of interest that they generate is very less. Another disadvantage of bonds is that there is always a risk of the company which has issued the bonds going bankrupt.
Moreover, there are some financial institutions that participate in the bonds market. First, commercial banks and savings and loan associations. They participate through bonds for their portfolio of assets. Sometimes they place municipal funds for the municipalities, and they issue bonds as a source of secondary capital. Secondly, financial companies. They usually issue bonds as a source of a long-term funds. In the third place, the mutual funds use funds received from the sales of shares to buy bonds. Some mutual funds with bonds specialize in particular types of bonds, while others invest in all types. The brokerage firm facilitate operations with bonds because they relate buyers and sellers of secondary market bonds. In the fifth place, investment banking signature place newly issued bonds by government and corporations. They can place the bonds and take the risk of an uncertainty about the market price, or they place the bonds according to the best option without guaranteeing a price to the issuer. Finally, in the same way, insurance companies and pension funds buy bonds for their asset portfolio.
What is bond valuation? Bond valuation is a technique for determining the theoretical fair value of a particular bond. Bond valuation includes calculating the present value of the bond's future interest payments, also known as cash flows, and the bond's value upon maturity, also known as its face value or par value. A bond is a debt instrument that provides a steady income stream to the investor in the form of coupon payments. Bond valuation, in effect, is calculating the present value of bonds' expected future coupon payments.
Thanks to you, now I know that I have to loan money to the user, and at the end of the period, the bond value has to be repaid.
I am Andrea Mora.
Hi, my name is Camila.